What's going on, guys? It's your boy Worm here. I figured I'd start a nice series of education for some of you guys that are just now learning, or even some of you guys that might have a little bit of experience. The whole point of this, I just want to kind of show you some of the tools that I have in my toolbox. If you want to learn more, make sure you guys follow me on Instagram at WormFX. And don't forget to apply to the Trader Village mentorship that's going to start July 1st. All right, so let's get into it. So what we have here, we have the S&P, or we call it SPY. All right, this is an ETF that you could trade options with for high volatility. One of my favorite moves, okay, is when I come into the market and I see trends. A lot of people, they say trend is your friend, but me, on the other hand, I target the break of trend lines. A lot of retail traders have liquidity down there. They have their stops there. And I trade with big institutions, with the big money, not against them. Also, my timing has to be right. What we can see here, right after we swept the high, and again, I'm looking for a rejection at the open of the 30-minute candle, which we got. As soon as we have a close below this area here for me, when we have the retrace, this black line, okay, this black line right here that you see, I use this area as my fail safe. I don't want to see price breaking above this line because that means we might actually target more buy side. But instead, we rejected as I expected, and price absolutely came to target that trend line that was once there. Me, for instance, I'm not greedy. I will use these trend lines to target liquidity, but I usually stop after the second touch, all right? So if we zoom out and go back to the 5-minute, the second touch of the trend line is usually where price will give you the reaction. Can it go even further? Yes, but that's when you start trailing your stops and stuff like that. I'm the type that likes to get my bread, especially these shorts, because these shorts pay a lot faster than the long position. So as soon as I exit the market, I might look for another reentry, or I might leave runners and then trail my profits, of course. These trend lines, those are what I target. And if we zoom out even further, you'll see that we have a lot more liquidity resting below as well. So if I use my tool here, you'll see the moves before they happen, right? That's what I like to call them. Not only do we have a touch here, we have a second one here, and we have our last one there. That means that I'm anticipating a reversal, right? From here, after it sweeps a high, to at least come and take out that sell side. Is that a big move? Can that take a long time? Yes. Will it happen anytime soon? Possibly not. This could take a long time. But with high impact news and all the consolidation that we have, I wouldn't be surprised if we do target that sell side. But that's how I come up with my bias for intraday trades. If you want to know more, make sure you guys follow me at WormFX. Click the link in my bio to apply to Trader Village if you're ready to be profitable.